Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Today we're taking a look at two Jamaican stocks on the cross-listed index of the Trinidad and Tobago Stock Exchange. We're talking about JMMB Group Limited and National Commercial Bank Financial Group Limited, or NCBFG. Both stocks, in terms of share price movement, would have had a stellar year thus far, with NCBG up around 57% and JMMB Group Limited up almost 140% as at Friday's close of trade. In terms of financial performance, however, there has been some divergence, with JMMB reporting lower earnings overall for the 6-month period ended September 2017, whereas NCBG has yet again registered a financial year ended September 2017 of growth. So let's first take a look at JMMB Group Limited, and for the 6-month period ended 2017 September, JMMB reported earnings per share of just around 5 cents TT equivalent, a 17% decline from the 7 cents recorded in the prior 6-month period in 2016. Driving this performance was an increase in operating revenue of around 5.4%, around 438 million TT equivalent, and much of this was attributable to improvements in net interest income of about 15% and fee and commission income of around 43%. Operating expenses, however, did increase significantly, 14.8%, or a 39 million TT dollar equivalent increase, leading to a decline overall in operating profits of around 12.9%, from 139 million to just about 121 million dollars TT equivalent. And this, some may say, is the price that is being paid for growth initiatives. As we can see, operating income or operating revenues, as a matter of fact, would have increased over the 5-year period for JMMBGL, just about 14% on average, whereas operating expenses would have increased at a faster clip of just around 20%, leading to an overall flattening and eventual decline in operating profits. And we can see here as well by the yellow line that there has been a decline to a more stable operating profit margin that we would have seen in 2014 and 2015 of around 28% or thereabouts. Now, in terms of valuation, the group has been expanding with initiatives including the launch of its JMMB Bank line in Jamaica, as well as pension fund management in the Dominican Republic. And that would have been fully factored in, according to the report from JMMB, into the fiscal year. The reporting statement. Now, have investors been paying too much for this growth or anticipating growth maybe a bit too quickly? Well, as we can see, based on the purple line, which indicates JMMB Group Limited's price-to-earnings ratio, it has moved significantly in a very short space of time, from just around 6.3 times at the 6-month period of 2016 to just around 22 times, which is its current trading level. The dividend yield, of course, of JMMB JMMB Group Limited has also fallen from around 4.3% around the 2014-2015 period to now its trailing dividend yield of just around 1.1%. Having said that, the group did recently declare that it will be paying its dividends in US dollars, which is seen as a positive for some investors. How does JMMB Group Limited stack up to its peers in the sector? Well, at a price of $2.18, it's trading at a price-earnings multiple of around 22.6 times compared to the sector average of just around 12.9 times. Trailing dividend yield, as we mentioned, is just around 1% compared to the sector average of 3.4%. On the bright side, the trailing dividend payout ratio is just around 23%, below the sector average of around 37%. So on the basis of a more muted performance from a financial standpoint, and in light of the very strong surge in stock price over the past year or so, Bourse changes its rating to JMMBGL from a neutral to a sell. Turning quickly to NCB Financial Group, for the financial year ended 30th September 2017, NCBFG reported an earnings per share figure of around 41 cents TT equivalent, a 32% increase from the 31 cents reported in the prior financial year. Contributing to this performance was an increase in net interest income from around 1.48 billion to just around 1.57 billion TT dollar equivalent, to a 5.8% increase, and operating income overall did increase around 15.3%. Operating profit did increase overall 17%, and importantly, share of profit from associates has increased some 242% from 44 million TT equivalent in financial 2016 to 150 million in fiscal 2017. And much of that is attributable to the Guardian Holdings effect. As we can see, in terms of operating income, there has been steady growth across the 5-year trailing period for NCBFG, as well as growth in operating profit also. Importantly, the group has been able to increase its operating profit margin from just around 26% in fiscal 2013 to just around 35.6% in its most current reporting period. Income stream-wise, in terms of operating income, there has been steady growth across most segments. As you can note, the blue columns, net interest income, has seen consistent growth, as well as net fee and commission income growing from about 423 million TT equivalent to just around 735 million in fiscal 2017. Gains on investment activities and income has also moved from just around 54 million in fiscal 2013 to just around 409 million in the last reporting period. Now, we spoke about the share of profit effect, and as you can see, share of profits from associates for NCBFG has grown significantly from just around 46 million in fiscal 2013 to just around 151 million in fiscal 2017. And as we mentioned, much of that is related to the acquisition of a 29.99% stake in Guardian Holdings Limited. So, have investors been paying a lot for this growth? Well, let's take a look. And again, in yellow, the price earnings multiple for NCBFG has increased significantly and consistently over the past 3 years, from 3.8, a PE of 3.8 times in 2014 to its current trailing PE multiple of just around 14.4 times. And meanwhile, the dividend yield has fallen significantly from around 10.5% in 2014 to its current level of 2.2%. How does NCBFG stack up against its competition in the sector? Well, it's trading pretty much in line with the sector average in terms of PE multiples of around 14.5 times. And its trailing dividend yield is just around 2.2% compared to the sector average of 3.7%. Importantly, its trailing dividend payout is just around 30% compared to the sector average of 52.4%, meaning there is some scope for NCBJ to increase its dividends when the time is right. So on the basis of improving corporate performance, but tempered by, again, an aggressive increase in share price, Bourse maintains its neutral rating on NCBFG. That's it for this week's edition. For more information, give us a call at 226-8773 or to Bourse. Email us at invest@boursefinancial.com or visit our website at www.bourseinvestment.com. Have yourselves a wonderful investing week. This has been the Bourse Report.